discuss the Iraq conflict and the impact on oil prices. Jonathan Barrett, Chief Investment Officer at the AS Alliance. Mark Keenan, Head of Commodities Research at Société Générale, now join us on this conversation. Gentlemen, many thanks for joining us on Bloomberg. Jonathan, let me start by asking you about your assessment of what's going on right now and how do you see this affecting oil prices?
Good morning. Look, I think really the price of oil at the moment is indicative of how we actually see the price actually move. I guess the conflict there is pretty much sectarian, and as a result of that, it shouldn't weigh too much on the supply of crude from Iraq. So I guess if anything there, the price of oil is pretty much indicative of the relevance of what's actually happening on the ground.
Mark, are you anticipating supply disruptions? Do you think oil prices are headed even higher from here on?
It's very difficult to say. As Zeb explained, it's an extremely complicated situation. Certainly the current risk premium in Brent, for example, sort of keeping the market between 110 and 115, we see remaining until we're somewhat clearer as to the exact agenda of what ISIS want to do. So far, we understand, and they've said that they want to establish an Islamic caliphate within Iraq. They've been very clear about that, and it looks likely that they will meet that objective quite successfully. Their extremely swift taking of Mosul that has shocked market participants has allowed them to acquire an enormous amount of arms from the Iraqi military fleeing the town so rapidly. They've also acquired substantial funds. So they are very well positioned to carry on executing their directive. But with respect to oil, there has been no disruption to exports from Iraq. The main hub of exports really is to the south, or the working hub is to the south in Basra. About 2.5 to 2.6 million barrels left there last month per day. Now, the interesting thing there is if that is disrupted in some capacity, the question is where will oil go? We see it shifting very rapidly into a 120, 125 range. This is Brent again. But it'll be short-lived. It will be offset by Saudi Arabia increasing production. The interesting thing there is they only have about 1.75 million barrels of spare capacity available, so they couldn't offset it entirely themselves. But that would be met by IEA SPR releases to quell any production shortfalls or export shortfalls.
Sure.
So really, we see it between 110 and 115 now. Any threat moving into Baghdad, moving south, will shift it higher to 120, 125.
Fair point. Jonathan, just the point that Mark was making, Iraq is the second largest oil producer within OPEC, and it produces about 3.5 million barrels per day. My question is, do you see the OPEC stepping in case this fight intensifies and supply is actually disrupted more than anticipated?
Look, I think you will. I think you will find that they will actually step in. But I think the crude market at the moment is certainly a lot different than it was, say, 10 years ago. We have a lot more supply, and there are different players in the market. So I think if there is this shortfall of supply as a result of reduced production or reduced exports, then I think it'll be quickly met up by OPEC, or it could in fact be by Iran. Remember, Iran, I guess by the UK and the US, have suggested that they should play more of a role in actually what's happening in the area. And if you think Iran is also looking to increase its production of oil as well, even though there are sanctions, it could be some leverage for them to also increase production. So I tend to feel that if there is a spike, then it should be short-lived, because I still believe that we have ample supply of crude in the world, and I guess we're going to continue to see that grow, particularly when we get more of the oil shale out of the US and Canada. So if anything there, any spike I think would be short-lived. In fact, I think this is going to be more of a sectarian issue, and I think that the Sunnis would be looking for their own state within Iraq similar to what the Kurdish did. And if they have their own autonomous state then you'll probably see the problem might go away. And I actually feel that that's what they're aiming for, their own autonomous state. As a result of that, there'll be no disruption in the crude production, and you'll probably see prices come under quite some pressure.
Sure. Mark, how then are you reading the demand-supply situation from the point of view of US stockpiles? Do you believe, as Jonathan says, that you're not going to see dramatic changes in prices because the supply situation globally seems rather comfortable?
You have to break it down between the US and Europe at that stage. Inventories within Europe and Asia are tight currently, and we're moving into a much stronger demand period in the second half of this year. We also have no supply really out of Libya. And Iran. Iran is interesting, as Jonathan was saying. We are forecasting this nuclear issue to resolve itself, and Iranian production to come back on stream. And this alliance, potential alliance with Iran and the US throughout this Iraqi issue may improve relationships between the two of them, and it may speed that up. With respect to the US, it's a different picture. US inventories are very, very high at the moment, particularly in the Gulf Coast, the main refining region. But they're still very tight in Cushing, despite yesterday's small build there. How we see the crude dynamics playing out in terms of, for example, the spread between WTI, the US grade, and Brent, we see that widening back down towards around $10 TI at a discount to Brent because of the retention of the risk premium on the Brent side and the rising inventories in the US depressing supply there.
Jonathan, if you look at Brent price right now, it's rallied about 4.5% last week. How do you see it behaving in the near term, even if you keep the Iraq factor out just for a moment?
Yeah. Look, I think generally speaking, you have a look at that 115 level, 115, 115.50, and to me that's a very important resistance level. I think if in fact you do get more restricted supply for Brent, then I tend to agree that you'll see that spread widen out, favouring the Brent, and probably see that move up to that 10, 12. If it does take out 115, 115.50, and that's similar on the WTI to 107.50, then I think you will see a quick, sharp move to the top side. And that move, or the reasons for that move, I think will be the important area as to see whether or not it's sustainable. So if anything there's a lot of resistance up there, and I think it's got to be an awful big push or an event that'll actually see it through that level.
Mark, same question for you. In the near term, do you see this trading in the 115, 117 range?
Well, it depends. I think if we get into that level, that means that we're probably on our way to 120, 125, because it will then imply that something is happening that could threaten the exports of crude from Iraq. As we said, so far, this hasn't been touched. So I think that we will stay within this 110, 115 level. To be honest, if we remove Iraq completely from the situation and go back to our core baseline view, we have Brent pegged in a 103, 113 range. Of course, we're a little bit above that now because of Iraq. And our general view is to buy dips for the rest of this year, a dip defined as something below $107, and sell that out towards the top of the range, around 113. So until we see clarity on what's going on, or an advancement into Baghdad, or some hint of what their agenda is with respect to exports of crude out of Basra, I don't think we're going to get up to that elevated level.